Welcome to Guardian Capital's Market Outlook discussion for the month of May. The agenda is to discuss four things. First, our thinking framework. Second, how the companies have performed. Third, how the market is currently being valued. And fourth, what are expectations moving forward. Our first principle is that over a long period, earnings growth determines 80% of the returns. In this slide, we want you to focus on the two red circles, which indicate that over 3 decades, price has been growing at 12% per annum, whereas earnings have grown at 11% per annum, which means that there is a direct correlation between earnings growth and price growth. Continuing on the first principle, the remaining 20% of the returns is determined by revaluation growth. Say in the last 10 years, Asian Paints has gone up by 20%, out of which 17% was due to earnings growth and the balance was due to revaluation. Revaluation means people were willing to pay 39 rupees for every 1 rupee earned by Asian Paints, but now they are willing to pay about 57 rupees, which accounts as revaluation growth. In this slide, we want to highlight on the importance of every extra percent of return generated. If we invest 1 crore today for 30 years and assuming a return of 11%, we would end up with 23 crores after 30 years. However, if we generate just 1% more than the 11%, we would end up with 30 crores instead of 23 crores. And if we generate 3% more than 11% return, we would end up with more than double of 23 crores. This is the power of compounding. Moving on to the second segment of the agenda, that is earnings. We want you to look at the highlighted numbers on slide. The revenue growth across the sectors has been improving over the quarters. The PAT margins have improved a lot compared to the historical 5-year averages. Moving on to the third segment of the agenda, how the markets are currently valued. Currently, the multi-cap, that is the BSE 500, and large cap are overvalued by 15 to 21%, mid caps are overvalued by 20 to 29%, small caps are overvalued by 12 to 20%, and banking is overvalued by 5 to 13%. Continuing with the last segment of the agenda, what should be our expectations moving forward? If we expect the companies to grow at 11%, with the current valuations, we can expect approximately 8% returns from BSE 500 and large cap, 7% from mid caps, and 8% from small caps. Investments in securities are subject to market risk. Read all scheme related documents carefully before investing.